Hey folks, Dividend Gardener here, welcome to Dividend Gardening. They did it! OSFI lifted the restrictions and Canadian banks have raised their dividends. On November 4th, 2021, Peter Routledge, the head of OSFI, or the Office of the Superintendent of Financial Institutions, told banks and other Canadian financial institutions that the restrictions aren't needed anymore, and that boards and management should make the decisions as to how to allocate capital while advising them to remain cautious. By the first week of December, which was earnings week for the big banks, the dividend increases had finally arrived, and we're going to rank 10 of them from smallest to largest and see just how close analysts were to accurately predicting these boosts. And yes, as of the date I'm recording this, EQ Bank has technically outdone them all with a 51% dividend increase. And while EQ Bank certainly is growing, it's not quite at the Big Six level just yet, so it's not on the list for that reason. Before we get into things, I'm not a financial advisor nor an analyst myself, so don't make any financial decisions based on this video, especially if you haven't done your own due diligence on these stocks. With that said, we'll start with the lowest dividend increase by percentage among the 10 companies on this list, and if you've been following from my last video, despite what the analysts had been saying as far back as earlier this summer, it's not Scotiabank. Starting off our list at number 10 is CIBC, also known as Canadian Imperial Bank of Commerce, ticker symbol CM. Back when I was researching analyst opinions on dividend increases, this was one of the banks that wasn't really mentioned in the news. It seemed like analysts were expecting a raise of some kind just by omission, because the lowest predicted increase had been no increase at all, but I never came across any specific percentages for CIBC. CIBC's previous dividend was $1.46, and its most recent dividend paid out on January 28th was raised to $1.61. Although it's at the lower end of this list, 10.2% is still a respectable dividend increase. Keep in mind though that this one increase might not necessarily tell the whole story. Pre-pandemic, CIBC would often raise its dividend after every 2 quarters, although it's too early to tell whether that's a pattern they'll reinstate or not. In at number 9 is Power Corporation of Canada, ticker symbol POW. This is another company that didn't get a lot of press related to future dividend increases, even though it also had its dividend affected by the same restrictions. Its 44.75 cent dividend went up by 10.6% to 49.5 cents, which was paid on February 1st, 2022. Next up, we have a two-way tie for 7th place. Bank of Nova Scotia, aka Scotiabank, ticker symbol BNS, and Royal Bank of Canada, aka RBC, ticker symbol RY. Let's start with Scotiabank, which before these dividend increase announcements had the highest dividend yield of the Big Six Canadian banks. Back in August, it was predicted by analysts to have the smallest increase, which was none whatsoever. Paul Goldberg with Bloomberg Intelligence stated under their prediction model, Scotiabank would be more likely to move further along its target payout ratio range. It wasn't clear whether that meant the dividend would be paid at the same level, which was 90 cents quarterly, or whether some sort of increase might be built into that move. Well, now we know, and Scotiabank has raised its 90-cent quarterly dividend by 11% to $1, which it paid toward the end of January 2022. RBC also raised its quarterly dividend by 11%, and the story here is similar to that of CIBC. Before its announcement, there wasn't much to go off of, just a general idea that RBC would do well and have some kind of increase. And like CIBC, RBC also had a twice-annual dividend increase pattern before the restrictions. So although it might be a bit surprising to see it only ranked at number 7th on this list, maybe they'll restore that increase schedule down the road. Though again, there's been no indication yet that that will happen. For the time being though, the 11% increase lifts RBC's $1.08 quarterly dividend to $1.20, which will be paid on February 24th, 2022. At number 6, we have Great-West Lifeco, ticker symbol GWO. It had declared its usual 43.8-cent New Year's Eve dividend on November 3rd, the day before the restrictions were lifted. So at the time, I thought we might have to wait until the first couple of weeks of February for a dividend increase announcement. A couple weeks later, though, it topped up its previously announced dividend with an extra 5.2 cents, bringing that New Year's Eve dividend to an even 49 cents, representing a 12% increase. We are halfway through the list, and if you're appreciating this coverage of Canadian dividend stocks, please help that like increase percentage go up by planting a like on this video. All those likes help the channel to grow immensely, and it helps this video reach more Canadian dividend investors. Thank you so much, I really do appreciate your support. And now let's move on to number 5, Toronto-Dominion Bank, ticker symbol TD. And while again, there wasn't a lot of talk about where its dividend increase would land, Rob Tetro of Canaccord Genuity predicted TD would be on the higher end of the dividend increase spectrum.
I do think BMO and TD will likely be at the high end of the range, something like 20-ish% increase.
And sure enough, it's in the top 3 among the Canadian banks at least. TD previously paid a 79-cent quarterly dividend, but its next one on January 31st, 2022 went up by a dime to 89 cents per share, representing a 12.7% increase. Next, we have Manulife Financial, ticker symbol MFC, at number 4 by increase percentage, but if this list were based on how quickly they moved to announce their dividend increase, they'd be at number 1. Manulife wasted no time after the restrictions were lifted. On November 5th, just one day later, they announced an 18% dividend increase along with a buyback of 39 million common shares. That doubled what analysts at Canaccord Genuity had predicted, which was only a 9% dividend increase. The previous 28-cent dividend was raised by 5 cents, so Manulife's next dividend payment on December 20th wound up being 33 cents per share. Analysts at National Bank figured that the average increase would be 23% among Canadian insurance companies, so this 18% increase is not too far off from that. Alright, now we're getting to the podium here. In third place, we have Sun Life Financial, ticker symbol SLF. Sun Life raised its 55-cent dividend in a similar fashion to Great-West Lifeco, and that is by topping up its existing New Year's Eve dividend that it declared just before the restrictions were lifted. Analysts at Canaccord Genuity predicted a 33% dividend increase for Sun Life. And while Sun Life did have the highest dividend increase among the big 3 Canadian insurance companies, it wasn't quite by that much. Sun Life's dividend top-up to 66 cents meant a 20% increase, which is still pretty impressive. Along the same lines as CIBC and RBC, when we look at Sun Life's dividend increases from a historical standpoint, they tended to happen twice a year, one for the second quarter and one for the fourth. That most recent dividend is that fourth quarter dividend, so it remains to be seen whether there might be another increase in the second quarter that might bring things more in line with analyst predictions. Alright, 2 more to go. The fact that we've got these 2 banks in the top spots will come as no surprise to anyone who's followed the Canadian banks in the news or anyone who saw my last video on the bank's dividend increases. Thank you so much if you did. At that time, Bloomberg intelligence analyst Paul Goldberg predicted an average increase of 13%. Later on, National Bank financial analysts predicted an 18% average dividend hike for the Big 6 banks, and analysts with Hamilton Capital Partners estimated an average ranging between 20 to 25%. In the runner-up spot, we have the bank that was predicted to have the largest increase, and that is National Bank of Canada, ticker symbol NA. 2021 was quite the profile-raising year for National Bank, especially with the move to commission-free trading on their direct brokerage platform this past summer. National Bank was also frequently mentioned by analysts including Bloomberg Intelligence and John Aiken with Barclays as being one of the dividend increase leaders the moment OSFI lifted its restrictions. But in an interview with BNN Bloomberg, Rob Tetro of Canaccord Genuity said he didn't think an increase might be quite as high as we'd seen other analysts predict, and it turned out he was right. National Bank's dividend went up by 23%, going from 71 to 87 cents quarterly per share, and shareholders can expect to receive the new dividend on February 15th, 2022. And that leaves our number 1 bank, which is Bank of Montreal, ticker symbol BMO. Analysts continued to have high expectations for BMO even since my last video in August. It was predicted to have the second highest dividend increase among the Big 6 Canadian banks, with Canaccord Genuity analysts estimating a 33% raise. It turned out to be a bit lower than that, but still, at a 25% dividend increase, I'm sure other BMO shareholders won't be disappointed to see their $6 quarterly dividend become $1.33 at the end of February. Before we go, if the range of dividend increases that we've seen here is a bit disappointing to you, Canaccord Genuity analyst Rob Tetro raises an important point here.
But they also want to save some ammo, right, Jameson? They want to save some ammo for future dates where they could say another dividend increase.
As much as many dividend investors have been waiting for these increases, and as much as we've seen the kinds of dividend raises US banks have made, I don't think these more gradual increases are necessarily a bad thing. Slightly lower but more consistent dividend increase rates are probably making OSFI feel a lot more at ease instead of huge increases all at once. I'm curious to know what your thoughts are on these dividend increase rates. Did you think they'd be lower, higher, or around these levels? And where did your favorite dividend stock end up in the top 10? Let me know in the comments below. If you made it this far and planted a like, thank you so much. Remember, I'm not a financial advisor, and this video is for informational and entertainment purposes only. This information might be outdated or inaccurate, so always do your own due diligence or seek the advice of a licensed financial professional. Thank you so much for watching, happy dividend gardening, and we'll see you in the next video.